It's about that time of day again. My name is Joseph. Tuesday evening, October 16th. Welcome back to your nightly newsletter. My job is to help new traders earn consistent, reliable profits using a simple and reliable trading strategy. And my plan this evening is to identify the most reliable trading opportunities, setting up for tomorrow's trading session. And tonight, we're covering crude oil, S&P, Nasdaq, gold, and euro. Starting off this evening, crude oil is bullish, but we haven't successfully broken out of this weekly trading range. So the plan is still to fade these breakouts. But now I've shifted the strategy now, keeping my eyes on a key support trend line, and I'm looking for a breakout pullback to sell this back down tomorrow morning. The S&P is bullish with a grind break on the chart. That may not sound like a big deal, but it's a big clue for me. That tells me exactly where to be looking for the most reliable pullback opportunities for tomorrow morning. So you definitely want to stick around for the S&P chart tonight. The Nasdaq is bullish with a strong run higher. Lots of very, very positive earnings coming out of the Nasdaq here this afternoon. So I'm waiting for a likely flag pattern. Most of the time when we see markets move this quickly, right, we're looking at either a range or a flag. Probably going to get a flag pattern out of this Nasdaq, which means I'm looking for a breakout pullback above those channel highs tomorrow morning. Gold is bullish with a trading range here tonight, so I'm looking for entry patterns to buy below the range low, and I'm watching some falling resistance lines to be used as key support tomorrow morning. And of course, we'll wrap up tonight on the euro. Euro is bullish with a trading range of its own, so my plan is to look for buying opportunities below the range. And I've got my eyes on a key pendulum swing support level for buying opportunities tomorrow morning. Boy, we have everything covered here for you guys tonight. I've got the gold, euro, crude oil, S&P, Nasdaq. We got some strong trends on the E-minis. Maybe a breakout on crude, maybe not. We'll take a look at that in a second. And of course, the euro, right, and the gold are both range bound. I'm going to break this down and put the whole plan together here for you in just a few moments. Before we jump into the charts, though, I need to remind you, if you're watching me tonight on YouTube, you can find a detailed written description of this entire trading strategy right here on my blog at sidewaysmarkets.com. I'll leave all the links in the description of the video. Also, if you have any questions about anything covered in this video tonight, please remember to post those questions in the comment section below. And if you like what you see, please help support this channel by subscribing to our channel, and don't forget to hit the bell icon so you get notified every time I post another video. And don't forget, if your goal is to become a consistently profitable trader, you can get your transformation started by joining our mailing list. It's right on the home page here at our blog at Sideways Markets, and that will take you into the inside section, right? You'll learn more about our trading strategies. Also, don't forget, you can download all the charts from tonight's video. They're located right below the video on our blog. Again, if you're on YouTube, the links are in the description of the video. If you're on the blog, those charts are right below the video tonight. And then don't forget, I'm always here if you need help along the way. If you need any help along the way, don't forget, right, call the office, right? We can answer your questions there, and we always have live support in the upper right-hand corner. All right, guys, boy, what a great day today. It's been a great week here so far. It's been a great month of October so far. We're a little more than halfway through it. Hope you guys are having a great day out there as well. Let's get ready for tomorrow's action. Tomorrow's Wednesday, October the 17th. We got some news tomorrow. Starting off tomorrow morning with housing starts at 8:30. Then we have the weekly inventory report for crude oil at 10:30. And of course, we're going to round this off, right, with our FOMC meeting minutes. Now, of course, starting off tomorrow morning with those housing starts at 8:30 Eastern time, that is always going to be a big potential market moving event. So you definitely want to be there early tomorrow. We open up our trade room at 8 o'clock Eastern time, so we'll be there right with a front row seat for the action tomorrow morning. Then, of course, we have the weekly inventory report, right? Tomorrow, of course, is a Wednesday. Wednesdays mean inventory day on crude oil. When I think about trading crude oil on Wednesdays, I think about early in, early out, and get to those trades before 10 a.m. Eastern time. The problem with trading during the news event is it's highly unreliable. It's incredibly illiquid, which means if you're planning on using a stop loss to get you out, right, that stop's not going to hold you, right, from big losses. So it's very much a gamble. I'm not here to gamble. I don't think you are here as well. If you are here to gamble, though, I would encourage you to do it somewhere else. There are lots of other places to gamble away all your money that have a lot more entertainment while you're doing it too, right? Check out Las Vegas. Check out Atlantic City, right? Plenty of casinos around the world to be happy to take your money and give you some cocktails and some dancing and some music. The financial markets are really not a great tool, not very fun, right, to just give your money back that way. So I always recommend on Wednesdays, make it easy on yourself, get those patterns, right, get those opportunities before 10 a.m. And then we do oftentimes see great opportunities after that news comes out, 10:40, 10:45, but it's very much a question mark, right? Will we get some good price action after that news comes out? Your guess is as good as mine. A lot of times the news comes out on Wednesdays by 10:35, 10:40. It's just a mess on those charts. But if we can definitely, if we can see some good structure, if we can find a trend, our channels, and identify some key support and resistance, we'll gladly look for patterns after the news, but don't hold your breath on that because it is very much a big question mark. And then, of course, one big variable for tomorrow afternoon. You thought this afternoon was filled with fireworks. We may see some more tomorrow. We get the FOMC meeting minutes at 2 o'clock Eastern time. Now, remember, let's kind of give some context here. The last time we had the FOMC announcement, right, 2 weeks ago, they basically stuck to the script. The economy is strong. We see, strategic, calculated raising of rates. They talked about another, right, increase. They raised it, of course, a quarter point. They talked about another increase, right, in December's meeting. So that December meeting is going to be what everyone's digging through these minutes for, because we all assume that next increase in rates, they're going to raise rates in December, raising the discount rate by another quarter point. The bottom line is, if those meeting minutes show any doubt in that next increase of rates, right, for December, you can bet these markets, right, are going to have a party, right, on these charts tomorrow afternoon as traders speculate on when the next, right, increase will be, which will probably end up being the following March, assuming everything goes as planned over the holiday season. The bottom line, though, is tomorrow, big opportunity if we can read into those meeting minutes and we don't see what was basically broadcasted in the announcement, right, 2 weeks ago. So a lot going on during the FOMC meeting minutes, but the key for tomorrow is probably going to be those December minutes, right, those to set that next December rate hike. What do the minutes say about that? And obviously, right, we'll be digging through that as well here at School of Trade. Tomorrow morning, though, 8 o'clock Eastern time, I've covered a lot here so far. Remember, I'll be happy to be your guide to help you navigate through these complicated financial markets, right? We do it every morning with over 3 hours of coaching in our trade room every single day. It's the only place, right, to kickstart a new trading career. So be there early tomorrow, 8 o'clock Eastern time, and we'll look forward to seeing you there. All right, let's jump in here. We got a lot to cover here tonight. Boy, we thought yesterday was a busy day. Today was really a very busy day here. We got crude oil, S&P, Nasdaq, gold, and we'll wrap it tonight on the euro. Starting off tonight with crude oil. Crude is bullish with a trading range and a bull channel on the chart this evening. Yes, the bulls have short-term momentum, but no, make no mistake, we never had enough strength from these bulls to qualify this as a successful range breakout. So the bottom can easily fall out of this market at any moment tomorrow morning. My preference would be to use this bull channel. You can see this kind of bull channel working our way up here. My preference will be trying to get underneath that channel, right, and using that channel, right, as basically resistance, right, using that support as resistance, right? My preference would be using it to sell as resistance. But at the same time, with tomorrow's weekly inventory report, we could easily see a sharp run higher. If we do see that sharp run higher, I'm going to go out and look for a new hidden channel, right? And we'll look to buy off that hidden channel tomorrow morning. And of course, right, one more thing, it's almost that time of the month again, right? Crude oil rolls forward around the 18th of every month. So we're watching volume right now. What you want to make sure you're watching here is, if I zoom in on this, right now we've got the 11.18 and the 12.18. We are currently trading on the 11.18 contract right now. What you want to watch closely for tomorrow is does that 12.18 total daily volume, does that increase to greater than the 11.18? So you can see right now, we've got a little bit more than double, pretty much double the amount of volume on the 11.18. It's just after the opening bell here on the Globex session. So volume is very low right now, but the reality is right now we're definitely trading the 11.18 contract tomorrow. So it may be the 11.18 tomorrow, right? Maybe it's 12.18. We're not going to know until we get to our desks tomorrow morning, but it's pretty easy. The 11.18 to the 12.18 contract, whichever contract has the most volume tomorrow, that's the one that we're going to be trading, all right? So keep your eyes on that as well. So bottom line here is it's a range, right? We're dealing with a range. We've been looking at that two-try, right? That two-try failure pattern here, right? We talked about that in a lot of detail last night on the newsletter. Today, really, it was for the most part, right? We had that one try, two try back down, but for the most part, though, it was pretty much a bull tone, right, of the day today, right? A very sloppy, right, tone to it. What's interesting, though, is we never really saw one try, two try, no failure, right? One try, two try, no failure. One try, two try, no failure. So we really had very little to do as far as selling. That created this rising support trend line. And ultimately, right now, there are basically three scenarios that you want to be ready for here tomorrow. I want to go back into that range, right? As a range-bound market, we're always trying to go back into that trading range. So, of course, the easiest way to do that is going to be what we call a breakout pullback pattern. That'll be a strong move down, a pullback, and we'll try to use the underbelly, right, to use the underbelly of that channel as that key level of resistance, right? Got to get below it. Now, at the same time, though, I'm also going to be watching closely here to see as we pull back, we're likely now going to see that as we pull back here, let's get this off here real quick. As we pull back off that, right, off that high, watch closely here if we can't get a good strong run, right? If we can't get some good momentum pushing lower, right? Remember this how it dropped like this, right? It'll look like that tomorrow. It'll drop and then hold the underbelly of that channel like that, right? It'll drop and then we'll look to use that momentum to sell off resistance. Well, watch if it comes back down to these lows here. Then watch for what I call the two-try failure, right? We're going to call it a delayed two-try. One try, two try, and then back up. This is the second buying opportunity here now that I'm keeping my eyes on, or second opportunity for tomorrow would be going with this bullish momentum, but more importantly, though, not just blindly buying that low, because again, it is a range and we're expecting this market to eventually end up back into that range. But again, we're coming back down to that low. We're not collapsing, right? We're not getting one of these guys going on, right? Not collapsing, but then we see around that moving average, one try for the bears, right? Two try for the bears, and then back up. We call this the two-try rule, right? That'll be your first try here for the bears to sell a pullback. That'll be your second try for the bears. And then once we get that nice signal, right, we can look for that buy going higher from there, right? So that's if price pulls back. Either that strong move down into that breakout pullback pattern off those lows, or a shallow pullback, right? Not a real strong move lower, and then it's a one try, two try, right, and back up we go. Let those bears, right, try twice as they kind of hold around that trend line using that two try failure pattern. Now, what if we jump, right? Because it's definitely possible. We got rollover coming, we got inventories tomorrow, right? What if we jump? What if we jump higher here? Well, there's a couple different things I'm looking for. One, if I can get it early enough, right? If we just see this thing just taking a tear here, then we go into trap mode, right? If this thing just really starts blasting higher, then it's pretty much whatever we can get our hands on. I'm looking for some sort of trap pattern here, a little pullback below a prior swing. This will need to be done quickly while it's going higher here, right? So make sure you keep your eye. This will probably be sometime in the London session, right? Overnight Asia into London. It'll be early, right? It'll be early. It'd like to be before we get into our desk tomorrow morning in the U.S. session. Got a lot of emails from you guys, a lot of comments on the YouTube channel from last night's newsletter about this particular pattern. So if it does jump, and you right, and again, quickly, right? First couple hours here of the overnight, when it's running like that, looking for that trap, right, to buy as we go higher. The more reliable thing, right, would be if we see the jump higher now we go out and go looking for that channel, right? We draw that off the highs, off the lows, right? And then we're looking for that channel now, right, to be a buyer off of that channel, right? Kind of like a hidden channel there. And who knows, maybe it lines up with, I just happen to draw this like that, maybe it lines up with the top, right, of that channel, and we can use that as support. Most of the time, when you see a market run up like that and then pull back hard, what's going to happen is they're just hunting for some sort of support level. So we find that support level, then we use that same two-try failure pattern, right? Let the bears try once, let them try twice, and then buy up from there, right? That two-try failure once, twice, right, and then buy up. That two-try failure pattern at the low of a hidden channel, right? There's money in those two-try failures. There's money buried at the low of those hidden channels. Again, that's if we see something, right, nice and strong as we go higher. And then don't forget, with that, if it does blast higher and go sideways, we'll talk more about that a little bit later on today. It does blast higher and go sideways, it's one try, two try, right, and then back up from there. All right, so boy, we've talked about a lot here so far, right? One, strong move down into a breakout pullback pattern. Two is going to be what we call a delayed two try, a move lower, and then one try, two try, back up. The third scenario is we blitz higher in the overnight session. Quick, right? Find that trap and get in during that initial trap, during the initial move higher, right? If you're like me and you're coming back for the U.S. session, right, then maybe it's strong punch up, new channel, right? And then again, it's one try, two try, usually below that moving average, and then back up from there, right? The two try, right, failure pattern around that hidden channel. Okay, so we covered a lot here in this first chart. I want to teach you some more about this, but I got to keep moving. At the S&P, the Nasdaq, I want to cover for you guys. So if you want to learn more, if you want to really dive deep into all these patterns, if you want to see what I call the price action cycle, you know, the markets are nothing more than a group of people, and those people take on a different personality, right? And that personality is different than the instincts we have as an individual trader. I want to teach you more about that price action cycle, but I can't do it all here right now. So the best way to do it is I want to give you a free trading class. This will change the way you look at the financial markets. They're very complicated. This will simplify the entire process, and you'll be able to see the truth and the reality of why these markets really move. Grab that free class. I'm going to pin it in the upper right-hand corner. I'm going to drop a link in the video description on YouTube. I'll also put a button right below the video on our blog here at Sideways Markets. But let's keep going, right? Let's keep going. A lot to cover here, and I'm already getting late in this video, so I want to make sure I keep moving. But again, get that deeper dive with that free trading class. How about some S&P? S&P's bullish with a channel, a hidden channel, and a grind break on the chart this evening. The bulls have the momentum. But with such a strong run higher, it's hard to imagine a pullback to support that won't be seen as a buying opportunity tomorrow morning. Knowing this, I'm looking for a pullback, and this grind break area down around 2,800, right? That may not seem like a very big deal, but it's a big deal where I come from. I'm looking at that grind break to be a key support level where I can look for a pullback before a retest of that high, right? There's gold buried in those pullbacks. It's all about finding the most reliable spot to look for them. So knowing this, right, looking for a pullback, it's also important to remember what happened last week when the market crashed, right? Remember last week when the market crashed, that big crash last week, what happened, right? The following few days were sideways. Remember this, right? Bear market into a range. We just broke today out of that, right, out of that trading range. So now with this big break higher, we can expect probably, right, the market will likely go sideways. In fact, markets that move this far, this quickly, usually either turn into a sideways range, which we'll look to then buy the low of that range. We'll talk about that in a moment. Or, right, they turn into a flag. And flag patterns are one of these really challenging bear channels in a bull market. And the best way to trade those is the breakout pullback pattern right up above those highs. So those are two very realistic possibilities here for tomorrow. But again, right, I think the most important factor right now is that, right, is that grind break. Only time at this point will tell. Now, what I want to do is I want to kind of extrapolate these things here for you. Let's get that channel off of there real quick, because this is really what the most important information is on this chart right now. It's a very well-behaved channel. We got great looking rotation, right? High to low, low to high, high to low, low to high. That is a beautiful qualified channel. But look what happens. They break free of it, and they grind up the underbelly of that channel. This is what it kind of looks like, right? Get that channel. Usually when you see a real narrow channel like this, usually it'll give you a deep pullback to free up some space and then blast higher, right? But this one, look what it did. We saw it going higher here. It broke and kept grinding, right? Kind of up the underbelly of that channel. That's why we call this a grind break, right? It's a break of the channel and it grinds, right, as it goes higher. The key is, right, why is this important? Why are you telling me this, Joe? Because the key is everyone's waiting to buy low down here, right? Everyone's waiting down here to buy that pullback. Everyone's usually waiting for that pullback to buy low. Well, look, they're still waiting. They're still there, right? Those buyers are likely going, hey, you forgot about us, buddy. Come back and pick us up. And what they'll do is they'll still be looking to buy low. And where do they buy low at? Usually it's right below that prior swing. So again, this may not seem like a very big deal, but it all starts with drawing the channel correctly, right? You've got to have some skills here. You've got to know how to draw that channel correctly. There was a technique to drawing it correctly. We call these hidden channels, right? Specific technique to drawing the channel correctly. And then you've got to have the wherewithal to look for that grind break, right? Once you find that grind break, again, we usually pull back for a nice deep pullback, right? Let those buyers buy low. We didn't get the pullback. Those buyers are likely still waiting down here, and they'll be looking to buy. Again, they're going to keep waiting here to buy low, right? Conservative, professional traders, people who have earned the right to be conservative, got big accounts, they leverage their money, they don't need to be trading 10 times a day, right? They trade 10 times a month, right? They wait patiently for those A-plus setups on a slower time frame. This is one of those A-plus opportunities here. So that is definitely a big level of support, right, that we're watching. Now, at the same time, if I can kind of get that off of here, right, and then add this in now, right? At this point, I'm really just speculating at this point, right? I've got this high. I know there's not much on the chart, so I'm always trying to find some level of support, right? You'll notice that support. Now, that support, if we just pull straight back, doesn't mean that much, right? But watch, if we end up going sideways here tomorrow, right? End up going sideways here, guess what? That support line, right, along with that grind break, right, could be a front row seat for the battle tomorrow morning. So that is definitely something you want to keep your eyes on. That's what I'll be watching for as well. So that key support trend line is very important, right? That kind of hidden channel support trend line. And again, I'm going over a lot right now. I don't expect you to know everything or even comprehend all of this. That's why I have that free trading class. Hidden channels, right? Flag patterns, ranges. It's all there in that free trading class, right? And when you register, you're going to learn a whole lot more, right, about all this fun stuff. All right, let's keep going. Now, the most important thing right now is, now that you've learned the grind break and the hidden channel next is to look for the range. Because this range is probably going to be the case here tomorrow. Maybe it's not. Maybe it turns into a flag. But typically, you see this much movement. Nobody's going to want to sell this market yet, right? Nobody dares to sell it, but nobody's going to buy it here either. So if we do see a range, right? What do we always talk about? 2-try rule, right? Want that 2-try failure pattern. 1 try, 2 try. Let those bears, right? Let them try once. Let them try twice, and then looking for that nice strong signal, right, to get us in long as we go higher. Now, if we get a deeper pullback, right, let's say we get something like this. Let's say it goes 1 try, 2 try, and really jumps, right? Well, now draw that trend line down, right, and use that trend line as your level of support, right? Kind of like a breakout pullback we talked about earlier, right? On the crude oil, right? That little breakout pullback. So if we see it really launch lower, right? Usually there'll be some trend line down here, and you can use that trend line, right, to buy off of that trend line. So those are some key components we're watching there if it turns sideways here. Another scenario that we should be aware of is a possible flag. These are also very common. Flag patterns are always a little bit tricky because they look like bear channels, and they are bear channels. But the difference is personality. Right? Trust me, if this market reverses, it's going to be violent, right? It's going to crash. It's going to crash hard. When this thing turns bearish again, if it turns bearish again, all those buyers who are holding back here because, they're hodling back to the all-time highs, right? That term, of course, has been used during cryptocurrencies, where those buyers are probably thinking they caught this bottom and they're going to try to hold a piece of this all the way back up to those all-time highs again. We'll see if that's the case. But the reality is that if this thing does turn bearish, those buyers they're going to be getting out of there faster than I'll leave my metaphors out of this, right? But they're going to get the hell out of there, right? Let's put it that way. So it's all about personality, right? If it reverses, it's going to collapse. This channel is lazy. It's sluggish, right? It feels like it's disinterested, right? It's not interested in selling off. It's just slowly pulling back. And you'll feel it, right? That personality will be really slow. If that's the case, then we look for that bull breakout pullback as we go. Right, so it's slow, right? It's slow as it, right? It's counting, right? It's counting sheep, right? It's sawing logs, as they say, right? It's slow as it pulls back. That's going to be your cue that this is not a reversal. This is a flag, and we're going to look for that buy right off of that high. Now, there is potential this may turn higher as well, right? Hey, who knows, man, right? Maybe it keeps going higher here, right? I don't predict the future. I just trade it. If we keep going higher, right, I'm going to call this a spike in channel, and at that point, we're in trap mode, right? We're in trap mode. Trap, right? If it keeps going higher. All right, guys? So, boy, I think I've covered everything, right? I've covered the hidden channel. We've covered the grind break, right? We've covered the trading range, the flag pattern, the spike and channel pattern, right? Again, I want to go into more detail on this, but I got a lot more to cover here tonight. So if you want to learn more about all of those patterns I've talked about, grab that free class. It's in the description of the YouTube video. It's on the blog, right? And it's also, of course, right? It's also, of course, in that information icon in the upper right-hand corner. Let's keep going. S&P looking good, right? How about some Nasdaq here? Nasdaq very similar here, but there's one thing missing. We don't have that grind break, as you can see. The Nasdaq is bullish with a strong run higher. Got a bull channel and a hidden channel on the chart this evening. Strong run higher tells me the bulls not only have the momentum at their back, but any pullback will likely be seen as a quality buying opportunity for the bulls. The challenge at this point is waiting for that pullback. And usually when we see price action move this far in such a short period of time, the following day turns into a range or into a flag. Now, if it turns sideways here, right, we're going up into a range. If we do see it turn sideways here, take the size of that trading range, right? The size of that range, copy and paste it down, and create support down here, right? The size of that range, copy and paste it down, and create that support level, right? So what we'll do is we'll find that support level if it turns sideways. I don't know enough about it yet, right? And then, of course, we'll look for that two-try failure pattern, one try, two try, around that level of support, right? Let the bears try once, the bears try twice, and looking for that run back up. Does that make sense, right? So once we see that range, take that trading range, copy and paste it lower, that creates the support level we need, right? And that'll be a key level of support for us to buy. Remember though, we're not going to buy the first try though. When the market goes range bound, we want to use the two try rule. One try, two try, it'll give you much better results by letting those bears try twice on those breakouts. Now, talking about fading those breakouts, don't forget about that hidden channel. Same basic principle we used on the S&P. I'm really at this point kind of speculating here, right? But I'll tell you that hidden channel there, that low may come into play here tomorrow as we start going sideways here, right, into that low, 1 and 2. We may see that range, right, line up right with the low of that hidden channel. So that is a valid possibility here for tomorrow as well. Another thing to keep in mind too, and again, a lot of this is repeating myself, right, from that S&P. But the thing too is, right, we see this quite frequently, right? Here's that flag pattern. Strong move up, lazy, right? Lazy pullback. Oftentimes, you'll start seeing that hidden channel now start to show signs that we're bubbling up, right? Now we've got that breakout pullback, and now we've got that combination of that hidden channel low with the high of that channel. Again, remember, if we're going to reverse, it's going to go 1, 2, and run, right? It's going to run. It's going to feel like the sky's falling. Everybody who thinks they're in the bottom right now are going to rush out of this market. Most of them will probably reverse their positions, right? Be sellers and then selling more. So it will be aggressive. If it really is a 1-2 jump, then we'll find that new channel and we'll just sell out that channel, right? That is the best way to trade it, right? But I'm not going to try to predict that reversal. Remember, this move down, right? This move down right there, that move down will be incredibly strong. What will happen is it'll pull back below the moving average, right? Most of the time, you're going to see that one try, two try, it'll fail. That will be a great trade tomorrow if we can get it, right? We go below the moving average. That's one try for the bears. We then pull back a second try off the moving average. Now the sellers are roped in, right? Now they're in a pinch. Now if it goes higher here, this is where those short covering rallies, this is where a short squeeze comes from. Sellers are stuck. They've got to get out. They shouldn't have tried calling that top, right? And we're looking for usually a combination here of what we call a two-try failure. Two-try failure into a hidden channel pattern. We talked a lot about this last night on the newsletter, right? But that is, right, that's your basic structure. You've got one try, two try for those bears. We're looking for the buy here into the stops of those sellers. And then again, we're looking for a buy off that pullback. That moving average will be like that, and we'll buy off that pullback. So if we can get that nice pullback below that moving average, right, hidden channel or not, support level or not, right, I'm looking for that seller failure and then a retest of that high. And remember, if we do pull back and then retest that high and then bounce again, now that becomes a range. We're going to look to buy below the low of that range. One try, two try, and then back up. Same basic range principle, right, as we talked about previously. Okay, so basically looking for a pullback, right? One try, two try, looking for that failure, right? Failure into pullback and then back up. That's one scenario to watch for. That would obviously be ideal. We'll see if we get that or not. Another one to really pay attention to is that range strategy, right? Again, find that range expansion level. Don't be afraid to mark it up with that channel. 1 try for the bears, 2 try for the bears, back up we go, right? Watch that flag. Watch that flag. Again, it'll be a lazy channel, up and go, right? Or maybe it reverses. Who knows, right? 1, 2, go. Find that new channel, sell at the top, right, of that channel. And who knows? Maybe we keep on going, right? Maybe we keep on rotating. If that's the case, I'm looking for traps, right? Traps, trap. And that'll probably happen early, right? If you're in London, if you're in Europe, it'll probably happen sometime in that overnight London session, right? So keep your eyes on those traps, right, as we go higher. So relatively simple plan here. We're just waiting for some more information right now on that Nasdaq. Let's keep going from some real strong trends back to now some range-bound markets. Let's talk about gold right now. We got gold and euro, both of which are range-bound. Gold is bullish with a trading range, a hidden channel, a measured move, and a resistance trend line on the chart this evening. I told you guys I would tell you more about how to use these ranges, so here you go. First of all, the bulls definitely have the momentum into that trading range. So whenever I see a bullish momentum into a trading range, it tells me to buy below the low of the range, right? And I like to use what we call the 2-try failure pattern. You can see a good example back here, right, where it goes 1 try, 2 try, and then of course you'll notice 1 try, 2 try. What else happens? Failure, pull back, and go, right? It's exactly the same thing I was just talking about on that Nasdaq. Now, sometimes you see a real deep pullback like this one, right? And you get this little trend line coming down. Right? Now that trend line is beautiful because now we can use that as additional levels of support. 1 try, 2 try, bingo. Now we can use that trend line coming down, right, as that key level of support. We talked about this earlier, right? If we get those extended pullbacks like this, I'm definitely not going to try to buy this area right now because the chances are pretty good we're going to get one more try that may stop you out just to run back higher again. You know, that's always a tough part about calling tops and bottoms. You can be almost perfectly correct, but then that momentum carries over and stops you out, you know, a couple ticks in your stop, and then laughs at you. Maybe I was the only one that was laughing at, but I swear those candlesticks have a big smile on their face, right? Once they're running back higher, picking my pocket, grabbing my wallet, and taking off in the subway, right? So I know, right? I know you guys have been in those shoes before. So when I find that trend line, we got the 1 try, we got the 2 try, want to be a buyer right below of that range, right? So we got that range, bull bias. I want a 1 try, 2 try, back up right into that trading range. You can also see here, right? We get a measured move, 1 leg, 2 legs, right? We're right around that measured move. That's a great level of support. I've got a hidden channel here, right? That's a great level of support. So this whole area, right? This whole area is looking great. I can take the size of this trading range, copy and paste it, bring it down. That's a key level of support, right? It's also a key level of resistance up top. All right, guys? So again, we're bullish here, going to that range, bullish into that range. What does it tell me? 2 tries, 1 try, 2 try, back up to retest the high. Looks like this. Again, if we have the luxury of a trend line like we do right now, we can use that 1 try, 2 try, right, and back up. The hard part is always, what do we do in the middle? We stay away from the middle. The middle will always be the chippy, choppy, sloppy part. The reason why is because the bears are selling off the highs, the bulls are buying off the lows. There's nobody here, right? Echo, right? There's nobody in here, right? Very difficult to find reliable patterns in the middle of that range because there's nobody participating there. Well, besides the rookies, right? The people that you don't want to be trading like. You want to be trading like the professionals, right? The guys and gals who know what they're doing. They respect, right, the momentum, and they know where to be trading. You want to trade those highs and trade those lows. Now, what do we do as we go higher here? Can we sell the two-try failure off the high? No, it's too bullish for that. What I want to do is I want to use that one-try, two-try, but then look for that hidden channel. Strong move down, find that low, find that channel. See how I'm drawing that, right? And then we're selling off that high. Remember, the key is you want to get short as close to that high as you can, right? Because you don't want to sell in the middle. And you know what's going to happen if you do sell in the middle, it's going to jump back up and make you pay for it. So you want to sell off that high. Again, I can't trust, I can go one try, two try, failure into hidden channel pullback here, right? I can do that all day long, right? I can trade that two try failure. I can buy that pullback all day long because the market's bullish, right? However, doing the same thing to the upside, one try, two try, a lot of times what will happen is you'll get trapped, right? There'll be buyers waiting there to buy that little trap, right? It happens all the time. It's going with the trend, right? That's going with the momentum. Okay, so two tries don't work. The two try failures don't work going against momentum. I mean, they will, but they're not very reliable. What I'd rather do is, and I want to buy there either, I want to wait for it to collapse, find that new channel, right? And then I know my sweet spot. Then I know where I want to sell. And all I do now is wait for that pullback and sell from there, right? Sometimes we get it, sometimes we don't. Welcome to life, welcome to trading, right? Sometimes we get them, sometimes we don't. What does a breakout look like? What does a breakout look like? Strength, right? First thing is strong move up, pull back, go, right? Could also be down too. Strong move down. Hold the pullback and go, right? That's what a breakout looks like. A breakout is all about personality, right? Personality. And in fact, I've got literally hundreds of examples of successful breakouts, successful reversals as part of that free trading class that's linked up in the description. Reversals and breakouts are very similar. They require personality, right? What's going to happen is you're going to see this strong move down. It's going to look really convincing. But when you get back to that moving average, all of a sudden, right, those bears, they turn little puppy dogs, right? All of a sudden they go, oh, no, I mean, we're not selling this. I mean, come on, it's a range, right? Nobody sells here. Nobody sells there. I mean, there are a few folks, right? A few people who don't know how to read market momentum, that don't watch this newsletter. There are thankfully always a steady flow of rookies entering the market that don't know what they're doing, right? My strategy, what I call the three-step strategy, uses, and I know it sounds bad, but it uses our knowledge of the way the markets really work. And then we look for opportunities like this where traders do not know what they're doing. They try to sell breakouts so we can then buy right into their stops. But hey, every time we see a range, it eventually has to break out eventually, right? So what does it look like? Strength. We see this thing pounding lower here. Now we know those bears are giving up. I'm going to look for that new channel. I'm going to mark up that prior swing. That gives me now my sweet spot, looking to sell up around those levels of resistance. Now, don't get too aggressive here, because if you look left, you've got that area back around 1219. That was the range from last Friday. So this could honestly end up just going right back here and then right back up again, right? So it's going to be a little bit difficult to be a seller here on gold. It really is. Much easier to be a buyer right now, whether it be one try, two try back up, or we get it back up, we get that 1, 2, 3, that nice big jump, right? We know we're breaking out now. We find that new channel. I don't want to chase after it. I want to buy at support, right? Buy at support as it pulls back to the low of that channel. All right, guys, so wait for that breakout. Now, speaking of breakouts, the euro almost had a breakout today. Boy, they really tried, right, on that euro. But like I always say to you guys, it doesn't matter how strong the initial leg is. All that matters is, can they keep it together and hold that pullback? How about some euro? Wrapping up tonight on the euro. We got a little bit of time left here in the video tonight. Euro is bullish with a trading range, a pendulum swing, and a measured move on the chart this evening. The bulls have momentum going into the trading range. So the plan is to look for buying opportunities below the range at key support levels tomorrow morning. And of course, I've got my eyes on this pendulum swing, range expansion, and measured move support levels here for tomorrow. Now, if you zoom out, this is nothing new here. It's the same basic range we've been dealing with all week here. Strong move up right into that range. We're bullish, right? We talked about two try rule, right? We talked about this last night on the newsletter. So really at this point, we're kind of just hunkering down right now, waiting for price to pull back. Now, what's interesting is you can take that trading range, you can copy and paste it up, that creates resistance. You can copy and paste it down, that creates support, right? Support and resistance there from the range. But also, too, did you know that the amount of the move above the range is oftentimes the same amount of the move below the range? So we call these pendulum swings, right? Imagine there's a balance area right in the middle of that range, right? The amount that the pendulum swings up is oftentimes the amount the pendulum swings in the back, right, back in the opposite direction as that momentum swings right back and forth. So we're expecting this momentum to swing back down around this area here. Now, knowing that, we want to be a buyer down here because we have bullishness, right, going into the low of this range. So I'm looking for support, right? Where are some support levels? First, pendulum swing around 16,000. That's good support. What else can we use here? We've got that range expansion support. And then this, of course, measuring pullbacks, right? Measuring pullbacks. This is not that, this is kind of different than a measured move. Measuring pullbacks, right? We had this much pullback before. No reason to think we won't get almost identical that amount of pullback, right, as well. That measured move, measured pullback that is, right, lines up beautifully with that pendulum swing. So this is the area where we're looking for. But let's make no mistake about it. All we really need is, how about this trend line? See what I'm talking about earlier, right? One try, two try, back up in, right? One try, two try, back up in, right? So you're thinking here now, good example back here, right? Draw that trend line off these highs. You've got that one try, two try, just barely missed that trend line, but still, you're still buying though, right, into those stops, right, as it runs high. It's a great example though of where it barely missed it, right, but that'd be a great example though if I could use a trend line like that, right? So you got that trend line now coming down. Again, it's one try, two try here, right? So again, we're looking at one try, two try, back up in. One try, two try, hopefully we can use that trend line, right, as our level of support, right? That's always something to keep in mind. Now, what would it look like to become a bear market? How do we turn bearish? Let's get that out of the way. Let's get that out of the way. How do we turn bearish here? Well, kind of two examples, two things to look for a bear market. Again, we already know one try, two try, back up. If that second try, one try, two try, if it runs, right? I mean, if it really runs, that's good personality. If it really runs to it, mark up that low, mark up those lows, find that channel, right? And there's our hidden channel, okay? Selling off the high of that channel, okay? Now, oftentimes, too, when we see these range-bound markets break, they do this. They go chop, 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 right? And they have kind of this, right, almost like this sleepwalking personality to them, right? The euro has that sometimes. If we see this thing just lower, 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 almost like we saw, right, as the market collapsed off the high this morning on the euro. If it keeps on going lower like that, right, you're not getting that strength, pullback, strength and running. It's just, right, lower, lower. Once we see that momentum start getting way too bearish to be trying to buy, and again, it's all about personality, right? Once we get a couple legs lower and you're like, man, this is way too bearish to be buying now we can almost always expect to see, we talked about this last night, right, is that little trap, right? That little trap, it'll be just above the moving average, little trap high. That'll be a great pattern, right, to look for tomorrow, right? It's a trap pattern. But again, you see it keep going lower, lower, lower. No real pullback, no real pullback, no real obvious strength either, right? But it's clearly bearish. It's clearly not bullish. It's clearly momentum is too bearish. At that point, little trap high, bingo, above that moving average. Those are usually nice little scalps. Quick target back to retest a low, let the runner run, right, as we try to make that move back to last week's lows. So again, we get a range-bound market going sideways, stay out of the middle. One try, two try, buy off that low. If we go higher here, one try, two try, can't sell off the high, but I can use that hidden channel, right, to sell off of that high using the right hidden channel pullback pattern. And then again, if we do see it strength pullback, strength and run, find that channel, sell off top of that channel, or if it chop, 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 right, trap, and then go from there. Guys, I've covered a lot here this evening on this nightly newsletter, and I could literally fill another hour going over all my ideas for tomorrow. But why don't we do this? Let's get together tomorrow in the trade room and do it together. You know, we all know there's big money to be made as day traders, right? If only we can crack the code. And to be honest, right, you know, being a successful trader is really like being successful in anything in life. It's not that complicated. You just have to have the right ingredients. It's like baking a birthday cake, right? The right ingredients in the right system, and you can accomplish anything. I call it the 3-step strategy. I've built a very simple strategy that'll help you make sense of these complicated financial markets. And we do over 3 hours of coaching on that strategy every single day in our trade room. It's all part of our advanced classes here at School of Trade. It comes with all the tools, all the templates, everything you need to plug and play. I'll give you all the cheat sheets and the flashcards. And the best part is you can come out and join me as a guest in our trade room on our free trial. Give me a call if you have any questions. Learn more about our beginner, intermediate, and advanced classes, right? And don't forget, I'm always here standing by if you have any questions 24/7. Guys, always, always, always a pleasure to be here with you, helping you learn and earn as part of this nightly newsletter. Now get out of here. We got some work to do. Rest up. Tomorrow another big day. My Dodgers didn't look that great last night, but luckily enough tonight, we got the Red Sox back in the game. I can't wait. Am I the only Red Sox fan out there that's a little bit worried about turning the TV tonight? Those Astros are so good. They are so scary. I'm a huge Red Sox fan. I was born and raised in New England. I didn't move out west to Los Angeles until many years later. I still drop my R's every once in a while. If you listen closely on this nightly newsletter every evening, I got to tell you, I've been a Red Sox fan since I was in diapers. And these Houston Astros they scare me more than the Yankees did this year. So I'm gonna be with one eye open tonight, watching that game here tonight. So hopefully we'll get a win out of the Sox here tonight. If not, what's your favorite team, right? Who are you rooting for? Who do you have winning the World Series this year? I would love to know. Drop me a comment in the comment section below. In the meantime, rest up. We'll see you guys tomorrow morning, 8 o'clock Eastern time. As always, my name is Joseph. Be well out there. Be nice to each other, will ya? And be here next time. Adios, amigos. Bye-bye.